Okay, good morning, everybody. Happy Tuesday to everybody. Welcome back to Engineering the Markets. My name is Jared, and it is September 27th, 2022. We're starting with a slight gap up open in the overnight session. So a lot of discussion about, are we going to kind of see our first bounce rally away from June lows and start to see a little bit of repositioning higher, a little repricing back into some of our overextension that we've seen in the market. A couple of factors that a lot of investors are watching, and some of that will kind of come to fruition in the next couple of days. More often than not, we're going to see some pretty significant price activity this week as things kind of hit their peaks and valleys. So first things first, the S&P expected move. Still have plenty of volatility expected this week. Just wanted to re-highlight some of these price levels, and especially if you're looking at directional targets, these are often really good areas to focus some of your targeted trade around, as they do coincide with either previous resistance points, or in the case of a fresh breakdown, we would be looking at things like the 200 weekly moving average on the S&Ps. So as we kind of shift into what does a balance range offer us this morning, I wanted to talk about what's being established right now and how can we look to take advantage of it if we are targeting different potential opportunities this trading session. So I'm going to bring things down to a 5-minute, and the reason being is whenever we see a market that's transitioning lower, we often will see moments of high transactional value starting to form in new high value nodes. Typically, these are price areas with high open interest, and often they can become the focal point for a couple of sessions as we tend to trade near, if not back and forth through these potential areas of high interest. So the one that kind of showed itself on Friday has a high area of approximately 368.8. The reason I'm really not marking the low is because we've seen a bit more downside volatility, but you could also mark off the low end, which would be approximately 367.45. Now, what I'm noticing, especially on yesterday's session, is a lot of our morning trade is centered around these prices. For one, we did open slightly lower. We rallied into this value zone that was established on Friday. We did pull into the lows, and this is kind of a notable move for the market to actually come to the bottom of this sort of choppy value range that was set. And then we tried to rally out. Now, the market did make it to 370 on yesterday's session, but as you can tell, we didn't have too much additional upside as we collapsed, broke trend, and obviously rejected at this high before selling off into our relative lows on Friday. So there certainly is a structure to this area. There's notable price inflections that are really important to understand. And because we are opening close to this zone, wanted to call it out as an area of interest, because gap up opens need to be assessed relative to how wide the gap is and what needs to happen in order to continue or to reject a possible gap move, in favor of whichever bias the gap forms. So the S&P is indicating that it's forming a balance range. And when you have a couple of sessions that form inside of the existing price range, you'll often note that volume starts to accumulate typically around certain areas of price activity. In this case, our volume point of control over the past couple sessions is somewhat located around 368. And that's going to be pretty much the middle of this little choppy area established on Friday. Now, we obviously have a low that's about 363, and that was, of course, tagged on Friday's low. We did see the market pull into this area yesterday. So one reason to think that we're in balance is because we're seeing high to low trading. We're not necessarily bouncing, but we're not quite yet breaking down once again. And the market has established these highs and lows with some nuance in between, especially for short-term trade. Amidst all of that, there is a middle, and this is important as well because it becomes kind of your conservative target, regardless of if you're going long or short. Oftentimes into the close, for example, we've seen rallies back into about 365 to 366. So if you're coming off of a low, that's where the afternoon rallies have pushed into. We have seen higher extensions. That was on Friday where we actually closed relatively high back into this, I'll just say the VPOC range, or the control area of the balance range. We have seen retracements back into this zone. But as far as the volatility, we're looking at approximately a $5 to $6 S&P range overall. So if you're playing conservative, and if you are at one of those high to low extensions, oftentimes you'll want to be taking some profit, or potentially even looking for new setups once you get to the middle. So $6 range, $3, whether you're coming high or low, would bring you to about 366. Now, all that said, this is our trading range for now. If the market continues to be in balance, and this is a pretty high probability scenario, you tend to stay in balance more than you break out from it. But if the market stays in balance, these levels are important. For one, if you're looking to get short, you need to be aware that the market can actually pressure the shorts a little bit before seeing follow through. And we saw that yesterday. It wasn't necessarily that the short started at 368.8, but it was where it got established after an up thrust, basically after a false high was made or a poor high with no follow through. Additionally, if you're looking to get long, sometimes the balance range lows offer sort of a high risk, high reward scenario. And we've seen a couple of cases of that. But in between, you'll notice that most of the trade has been centered into full extensions. If we do reject from highs, the most likely scenario of the past couple of days is that we transition to the lows. We don't really find a base of support that holds at 366. It just is our middle, our chop, our mid-range. A lot of people call it mid-range defense. It tends to just be the central focal point of trade. So those are some concepts that I think are important as we kind of remain in this area. If we decide to break out, there is this opportunity that the market has, and it's going to be fairly apparent on a higher time frame. You'll notice that we got to this balance range low on an overnight gap. So we really didn't leave a lot of resistance above us. If the market can push away, and obviously that would be clearing 368.8, continuing to hold a trend, and ideally seeing something like a back test to really ensure that we're not going to fall back into balance. All of those conditions, we could see a move back into another area of high transaction, which in this case is set pretty high above us, about 375. Now, what would be the reason for the market to be bullish today? Obviously, we have a bullish scenario based on chart structure, volume profile, and maybe some conditions in regards to how the trend might form. But what would force the market higher today? What would be some things to look for? First things first, I think we have to acknowledge pretty much every day until this changes that the dollar is pretty much in focus. Most investors are watching the dollar. They're looking for relative highs. They're trying to be a little bit more precise in the timing of when this can start to draw down. And as you can tell this morning, we're not really expanding, but we're also not contracting. We really haven't broken a high or a low yet. So things are still kind of tentative as to whether or not this is still going to advance in the future, or if we are starting to draw back in. So that would be first and foremost. If the dollar is stalled out, the market can remain in balance. If the dollar pulls back and actually pulls in, the S&P has a case to continue and break out of balance, pushing it back to about 375 would be one of the top side targets to look for today. Another thing that most people are focused on is rates. Now, rates obviously advanced further yesterday. The TNX especially kind of crested at about 3.9 on yesterday's session. Once again, these risk elements coming into alignment would provide the fuel for the S&P to rally. But if we ever see a little bit of, I would say, confusion or a lack of clarity in either of these indicators, the S&P can once again remain in balance, and that would be the more likely scenario. And then last and not least, this is going to be more the bearish scenario. So one thing that I've been bringing into focus has been the behavior of high yield corporate debt and how that can sort of lead the market. Because HYG, for example, has broken the June lows, it is indicating, at least as a leading indicator, that the market has a high probability of doing so as well. This doesn't necessarily have to happen today, but until this picture changes, the risk on nature of the market is already under pressure and it's already cresting to new lows. So the S&P is very likely to follow simply based on this analysis. You'll notice a lot of similar moments in time, a lot of capitulation and fear back in June, the restabilization of the June lows into July, and then of course that similar rally that we got. It tends to lead by a couple of sessions. So if you're marking off days where the S&P broke out and continued to rally, there were signs of that occurring in something like HYG prior to. So it tends to lead by a couple of days. This is kind of what's keeping most people on their toes, simply because if this was going to be more of a false low, so far we haven't seen it. It's definitely got the volume and the momentum to indicate that the S&P will just eventually break down. It'll eventually make its way lower. So those conditions are important today. If you're looking for intraday edge, look at the balance range, identify not only your spike high from yesterday, 370 is important, it's the absolute high, but more so 368.8. That is where I would say a setup is more likely to form as opposed to trying to be aggressive against 370. And obviously the case back into balance is that we go to 366 conservative or 363 high to low, balance range high to low. So a couple of things from yesterday's trade. So I closed it. Trading terminal. There was some short-term, I would say intraday relative strength. A couple of key stocks were holding the market fairly well. We had stocks like Apple and Tesla with morning rallies that continued even amidst the market pulling back in. They certainly held some of their upside a bit better than most. But what you'll notice overall, and especially as the session started to close out, most things became correlated. Whether they were selling from highs or coming into weakness, begetting more weakness, a lot of our sectors were net bearish yesterday. And if you're looking at something like an equal weight ETF or anything that shows market breadth, yesterday was not only a weak session, but we're actually losing relative lows in regards to, in this case, a more equal weighted ETF like RSP. I won't say lose, but we're touching. We'll probably need about a day or two to really know, but the volume is indicating that there is momentum here, and we're certainly at some very important levels. I mean, that's going to be true no matter where you look in this market. So the case is certainly still bears are winning. The downside case is still very strong. I wanted to talk more about the balance approach and how to approach a balance range when it forms. Understand that if we break away from balance, the market starts to trend. Try not to be too, I would say, locked into a bearish mindset until we get to about 374 to 375. That's where the next volume node is living. And if we can reject 370, it's a good chance that we will sort of just find our way up there eventually. That's typically how balance ranges work. And because it's about a $5 to $6 range, you want to be thinking what a breakout of a range can do. It usually can double. So even from 368, you're looking at about 373 before you see another strong defense of the overall price activity. I guess last but not least, too, the volatility readings that we've been seeing. Nothing really of note today quite yet, but we are seeing a stall, until that really changes and sort of comes back down. This continues to be in focus. Okay, couple of asset classes to watch today. I think crude is finally at an interesting level to really pay attention to for more swing and multi-session trade. Obviously, the trend is still very bearish. We're seeing lots of retracement from our March and June highs. Everybody's talking about how the crude asset itself or just energy assets tend to underperform as demand starts to erode in more recessionary periods. And that's certainly been true on the price chart. We really haven't seen an uptrend in quite a while in crude. The thing I'll just note here is that this particular price of crude is of significant importance. It is not only a historical inflection level, but it's also a more recent area of high impact trade. So whether you're looking at support, resistance, there's been a couple of cases, and even back when the market was rallying, there's a period of time here where we called out 77 per barrel as basically a short-term top. Market did have a significant drawdown during this time. Crude did basically pull back about 15% from 77. So as we are back at this price, the trend is still bearish, but it is a level to watch. And if there is going to be something as simple as a monthly bounce, a weekly range, or anything that's more or less tradable from the downside, this is about where I'd expect it to form. Be looking for that over the next couple weeks. And if you're looking maybe for some trade, watch the energy sector to see how it responds to that. Any sort of covering obviously would be counter the current breakdown that we're seeing across energy stocks, but it might also offer that moment to get bearish. No matter how high it pulls up, you might actually be able to get a better price for bearish trade looking for another extension. And obviously, if the energy stocks are rallying today simply based on crude pricing, that obviously is a benefit for the S&P. So other than that, there's a couple of key names that I'm watching for an indication of support. I've called out Meta quite a few times. This is a stock that has given back everything from pandemic lows. So to be frank, from a price perspective, it's a full retracement. But just like most full retracements, I do expect there to be some covering before we see fresh lows. It's a level, it's an area of interest for the market. And we got there yesterday. Not really seeing anything indicating that it's really strong now back to the upside, but certainly the price to watch. It's the area of interest, and because earnings are coming up in the next month, ideally we would see something like a bullish lean into earnings. Ideally, if the market can be bullish as well, that would be helpful. But for now, let's indicate that it's just at COVID lows, it's at pandemic lows. So that's a stock I'm watching simply because the communication sector has been a drag on the market. We've seen not only a fresh downtrend, but some of that downside momentum has been quite strong. You compare that to other sectors, ones that are just now testing June lows, and if you look at communication, they've actually crested the low. So they've accelerated momentum, they've led the downside. And that's very similar with smaller sectors like real estate, which are also seeing lots of pressure in regards to rates being accelerated back higher. And obviously, structure is important here, but this is a downtrending chart with wide buy and sell swings. So no matter how you look at this, it's kind of similar to the S&P. There's a massive trading channel, but when you're making fresh lows, you want to at least extend to the lower bounds. You usually don't trust these lows to hold because they often have broken historically. So just a channel structure. You'll notice this a lot across the market with varying degrees of volatility, but a lot of our price activity has been trading in fairly wide, but ultimately bearish trading channels. Some breaking faster than others, but ultimately still leaning down. So Meta is a stock of interest, mostly by location. If we're looking at dollar coming off, gold and silver continue to be kind of an asset to target, especially if the dollar comes off quickly. I would expect gold to start rallying off of that. You can see signs of that this morning, but it's obviously just a 2-day reversal setting up. And same thing with silver. It's one of those things where the dollar is really the important signal. Everything else is going to move relative to it. But until you see the dollar truly back away, these are setups that can easily fail. If the dollar advances again, then obviously these would be under pressure and potentially not have the same upside as we're looking to target. So that's pretty much it for today. I've kind of gone around the market as a whole to give you a little bit of a bullish and bearish case today. The bearish case is really that we stay where we are. Market remains in balance, and ideally we can see a similar trading session to yesterday, where we maybe have a little bit of an upthrust or a move, we fail, and then we come back inside. And obviously if you're bearish, you're targeting about 363. or that 366 mid. If you're bullish, you need to see a couple things maybe lead that breakout. The dollar pulling back would be ideal. Starting some sort of hourly or 4-hour downtrend would be, more consistent, and it would start daily consolidation on the dollar. And that alone could be a bullish case for the S&P. But remember, the macro here is that there is a leading indication that we will see fresh lows. So no matter how far the S&P rallies from this point, I'd still be saying to kind of remain somewhat bearish and look for good pricing to put on bearish trade, especially if we see more confirmation, more sort of breakdown, and obviously more pressure from all of our risk indicators. So with all that said, my name is Jared. This is Engineering the Market. We'll take a look at some of the questions in just a moment, and stay tuned for pre-market prep. Have a great trading session. We'll talk more tomorrow.
Good morning, everyone. Oh my goodness. What is that jovial face I see this morning?
Hey, good morning, brother. I don't know about jovial, but I'm here. How are you? Could you not hear me before?
And I forgot to put my headset on, so I can't hear Norm.
Gotcha. Yeah, I don't know about jovial, but I'm here. How are you?
I'm good. I'm good. Well, like, you got the camera working, so that's fantastic.
Yeah, finally. Finally.
Let's just check. Everybody can hear us on YouTube. I think we're good. Sound is good. Okay. Well, look at this. We have a lot of green on the screen. It's been a while since I've seen the left-hand side of my chart here all full with stock,
It's a nice surprise to get up to, isn't it?
yeah, a bunch of gappers here, and basically nothing over on the right. We have one little thing, but we'll come back to that. And yeah, well, look, why don't we get right into, because I think this is being caused by some of the early morning activity. We got a lot of sort of small things happening in on the economic calendar. I'll let you sort of give us the rundown, Norm.
Yeah, we just had durable and core capital goods orders data come out. I think it was relatively in line. Home price index at 9 a.m., both the Case-Shiller and FA. Consumer confidence at 10 should be interesting. New home sales at 10. And then we have, I mean, like every Fed member there is speaking today, it seems. They're all across the place. Hang on, I lost my extra note sheet. I mean, 3:30 a.m., 6:15 a.m., 7:30 a.m. Jay Powell was speaking. 9:55 a.m. St. Louis Fed president. 1 p.m. Neil Kashkari of the Minneapolis Fed, and then tonight 8:35 San Francisco. So that obviously isn't going to impact our trading, but that last one anyway. So a ton of Fed speakers today. Yeah, I mean we've been in a bit of a rout recently, and yesterday pretty weak, but we're popping up a little bit this morning, 1.3%.
Indeed, we are. And like you mentioned, the Fed speakers, I'm thinking that's having an impact this morning. As you see, look at all the green, even on the watch list as I look at what we were looking at yesterday. This morning, Bitcoin jumped up above 20,000, and I noticed the top of our gappers list are sort of our big three sort of cryptocurrency offerings. So Powell's speech this morning at 7:30 is apparently about digital currency. So cause and effect, I honestly don't know, but it seems to be that there's a little bit of a coincidence there. So we'll see what that brings. Yesterday, if all of you who were here, we were looking at whoops, I'm on the wrong screen. We were looking at a couple of things led by Las Vegas Sands, which if I go back and sort of look at the yesterday, it doesn't look like it did much. We actually had a sort of a decent trade opportunity off the open on LVS, and if you got into that and just held it, it had sort of a good rise throughout a good portion of the day, so that could have provided some opportunity. We were also looking at the EV stocks yesterday with XPEV and LI. And as you can see, they moved a little differently. LI especially had a wonderful move off the open. Brian in the chat room took advantage of it. Only got in about mid-rise here, but took it through 26 and higher and got a great move. XPEV, on the other hand, was a little choppier, but I know that a few people were trading it. Maybe last but not least of what we were looking at was Netflix, which just jumped off the open and managed to hold on to some of those gains, not all of them, but throughout the day, and gave some good trading opportunity. So with that, let's clear the list, see what we're going to get today. Here we go, delete. Off we go. Okay, so like I mentioned, on our gappers up, we're led by, and I forgot to link, so let me just quickly link up my trade ideas to my DAS platform, and here we go. All right, so Mara, Riot, and where here it is, coin just dropped down a position, all sort of gapping with the same relative chart, right? Gapped really early, relative flat action, coin, Mara, Riot, whichever one you like to look at. We can look at one or two of them for levels. Maybe coin and Mara would be the two I'd probably put on here. Norm, was there anything other than Powell talking about his view on digital currency going on?
Well, I mean, just that it's bounced up above 20. I don't know that Powell had any influence on this, really. Maybe he did. I know he was, like you said, he was talking about digital currency, but I'm thinking more that that's the central bank digital currency kind of conversations going on. I don't know that he was talking about these kind of cryptos or not. But no, I mean, I think it's primarily that bounce, all in all.
Yeah, so we'll see if that continues, but there might be two opportunities there. I just clicked on to Carvana, CVNA, with 160,000 shares, up 6%. So far, our pre-market action doesn't look great. This seems to be coming in fits and spurts in terms of the volume. I don't know what's driving it this morning. Anything exciting?
No, I really think this is this thing has pulled back greatly since it recently ran, and I think it's just getting a pop on some of that. Um, just a little bit of a bounce from being sold off so hard. I mean,
Right.
uh, yesterday it dropped from what closed the day before at was it that? Yeah, I mean it fell
26.
10%, I think, yesterday. So it's just probably a little recovery bounce on it. We'll see. This one,
Yeah,
I don't pay a whole lot of attention to it. It trades intraday horribly.
yeah. I have never seen good trades on it. I don't know that I've ever even traded it, and it could just be getting a bounce on just the general good feelings we've got in the market this morning. So,
No, I
anyways, I'm
agree.
going to skip over it. BBBY, now that has often traded well during the market hours. We're down at $6 on this thing, though, and I don't think there's really any good news. This feels like just the same type of good feel bounce.
There's some. I mean, this wasn't on the list earlier when I was looking, so I apologize. I
No, no, it's
just
been
hit
running its way up the.
125,000. Yeah,
Yeah,
it just hit 100,000 in volume not too terribly long ago. So within the last 2 or 3 minutes, I believe.
yep.
I know they're talking about turnaround plan, but Bed Bath and Beyond's been talking about turnaround plan for the last
Exactly.
15 years.
Exactly. So until I hear that they've paid off all their suppliers and they've got stuff in the stores and they're packed, I'm not going to get too excited about it.
And they
But
don't
anyways,
send you a
well,
20% off coupon a day.
I am fortunately not on their mailing list. So all right, so let's see. We covered all of these here. That brings us down to NET 800,000 shares. This is Cloudflare, up 3%. Again, pre-market action still not looking good on this one. I don't even know where this 800,000 shares came from. So I look at the volume so far this morning. I don't see it anywhere in the chart. I mean, they've only been trading a couple hundred shares per minute here.
There was a 582,000 share block trade that went through sometime earlier, but it's not. I think it was from yesterday because it is
Okay.
at the close price. So it must have just registered this morning. It doesn't even
Mm,
technically show up on the chart. I see it on level 2. So that must have transpired yesterday. And actually, it's larger than that because there's 4 separate components to it. There's another 230,000 share parts of it, and another 180,000. So that's almost all the volume on that.
right. So which would say basically that this
Garbage.
is not really in play. It was
No,
just
no, no.
sort of a block trade. So I'm going to take it off. I'm not even going to look at it anymore. Lucid next. Now Lucid is actually looking good pre-market. We got some volume and movement on it. 450,000 shares, up 4.5%. Well, my list is sorted again poorly.
They got
But
an
anyways,
upgrade out of Cantor Fitzgerald this morning. Overweight rating, $23 price target.
overweight at 23. Well, okay. All right. Well, maybe that's what's pushing it. Where it could be taking advantage of the move that some of its compatriots in the sector experienced yesterday. So we'll see. I'm going to put it on my list for now, and we'll see where it's going. AMC is on the list here. Wow, this so far the pre-market action doesn't look good. Again, like I keep pointing out, see these tiny little blocks within 1 penny. That's a sign of just computers trading it. Not that that's a particular problem, but it is when only the computers are trading it, which is usually creates this sort of visible pattern. 650,000 shares, up exactly 5% at the moment. But again, if you like the meme stocks, maybe watch it. Otherwise, unless Norm, you say there's massive news, I'm going to ignore it. Ignore it.
Um,
Upstart. Oh,
yeah, I don't think anything's too great. They got hit because they're doing something with ape shares. I don't know if they're releasing more of them or something like that. Um, so this AMC dropped yesterday, I think, on that. I think it's just bouncing from there.
AMC and Ape. We were talking about Ape, the ticker Ape, yesterday. I still think that's a brilliant move by AMC, where they're just messing with people. They're like, no, we're not going to issue more stocks against our against our ticker. So instead, they just create a whole new ticker. To me, it still dilutes the value of the company, but they got around their promise. So anyways, AMC and Ape is up, 400,000 shares, up 9% this morning. Now keep in mind, this thing is under $4, so percentage moves are less relevant because look, that's a 30-cent move to get up 9%, right? So anyways, but I'll put AMC down here in the secondary list, and maybe we'll just come back to it as we get closer towards the open. All right, so that brings us to CCL, and we got a lot of stuff on the list here, so I'm going to have to start skipping over some of them. CCL is sort of slowly moving up. Again, tiny little candles here. Again, looks like computers trading it so far in the pre-market. We saw this, I think it was yesterday or Monday. I can't remember when it was, but one of the last couple of days anyways, it was doing the same thing. And doesn't mean that it's... I was losing track of the days. I'm like, wait a second, what day is it today? Oh, it's only Tuesday. So it was either yesterday or Friday. But anyways, doesn't mean it's necessarily doing anything. I think it was Friday, actually, because I remember you being here, Norm. We were talking about the cruise lines moving, but it turned out to be all for naught. There was really nothing interesting going on with them. So is that the same thing today, do we believe?
I haven't seen really anything interesting in the cruise lines take place in a year. I mean, they're generally dead.
Right. CCL,
this doesn't look
NCLH,
exciting
I
to
noticed,
me either.
Right, NCLH a little farther down the list, so guys, nothing going on there. Let me skip quickly through some. Frey doesn't look good. I'm going to move over that because we have every day we've seen it. Shopify on the list today. It doesn't look fantastic, but hey, if there's news, I'll pause when you tell me to. Norm, otherwise I'm going to keep going here. DKNG.
I'll break in if there's something exciting I see. I will say on this, I think I heard something about Kathy Wood creating a new fund, and I believe Shop might be involved with that. I don't hold me to that 100%, but the new fund, yes, I think Shop is. I think that's what some of the catalyst on Shop is. I don't know if that's a positive or a negative these days, but
fair enough. I guess it doesn't really matter if it's going to be a component of a new fund that could indicate some buying, which would just be positive no matter what the fund is. But it doesn't necessarily mean that's going to move Shop today, right? Because that buying won't necessarily all happen very quickly. Anyway, so we got stuff that's bouncing around on my list here as they sort of jockey for position. So Shop, Plug is on the list, also not looking great. DKNG not looking fantastic. I mean, these I think are just jumping up on general positivity in the market. Neo is one that often we like to trade, so it's also on the list. Pretty average volume for this type of the morning. I think Lucid looks better than it so far, so I would look at that. Hood, again, looks same profile, right? When I say that, what I'm looking at is this 1 minute chart that basically has very little volume and entire minutes where nothing virtually is being traded, right? Nothing for me is anything under sort of 5,000 shares. It means really there's not much going on. So EMR, no, this has got nothing traded because this is a NYSE stock. So look, I don't even have after hours trade information on it. AAL. Here we go. Took a minute for the chart to move in here. Again, doesn't look good. Oh my goodness. We got lots of stuff that I think is just getting buoyed by the little bit of the pop in the market and aren't necessarily in play. Now Tesla is looking actually okay this morning, moving up fairly slow and steady here. We did see an actual upward move on Tesla yesterday in what was a very down market. So, it wasn't a massive move, but it did move up. So Tesla, I think, would be interesting today. It's on sort of my permanent watch list, so we'll definitely set some levels and watch that for later. Amazon is here on the list, also sort of looking okay this morning. Maybe I'll throw Amazon on a secondary. I don't often set levels on that. Maybe today would be a day worth doing it. NVIDIA, likewise, see we got a little more steadier price action. Moving up this morning, NVIDIA and AMD sort of suffered yesterday with some push down. You notice them sort of side by side here. Whoops, on the gappers list this morning. So maybe it's also going to get a move. I'm going to put NVIDIA here for setting of levels. All right, I'm getting down to the low end of the gappers here. The last one I think I'll look at is Oxy. Energy plays. Jared was mentioning that in the engineering the markets section we had before this. Might be worth watching. The pre-market action doesn't look, amazing, but if it's one that you often watch or like watching, then it might be worth keeping an eye on. So I'll put it also down here in the secondary. All right, we got one thing that's just been sitting on the gap down list, LW. Now it's been sitting there. Being said, it's a NYSE stock, Lamb Weston Holdings or Hotels. What is this thing? Hold on, Holdings, Lamb Weston. I've never heard of this thing. Really, we've
Frozen
got
potato products.
Really, okay.
Yep.
Get yourself some hash browns this morning. And why are they on my gap down list? Any idea?
Potato.
Is potato. All right. Well, I have sort of no pre-market action on it. Being a NYSE stock, like the chart's not even updating for pre-market activity.
Look at the spread, Peter.
And
on the level one,
yes,
$10
okay, so
almost.
What Norm's referring to is, look at this. So before we get to any size, you can see we got a spread of almost exactly $10, and it's not moving. So definitely, I would say this is a no. I see no reason to pay attention to it. It's not doing anything interesting right now that would tell me I would want to keep an eye on it. All right, so we're going to come back and set some levels on that, though.
One more time, potato. Because it will probably never show up on our gappers list again. It never has in the past. Any excuse to just,
say potato. All right. Well, with that, we always have a slate of activity going on in the Bear Bulls trading room. So let's cut to that, and Norm can give us the rundown.
Yeah, onboarding technology every Monday night, 8 p.m. Eastern. Mike and Carlos, check that out. Then on Tuesday, we've got strategy. It is Tuesday. Tonight, we've got Andrew, 8 p.m. Eastern. He's going to kind of give the 30,000-foot overview of his trading, from technology to what he likes to trade, how he got into it, everything else. And then next week, Peter, you talking about advanced risk management. I don't know why it says advanced risk management topic. That's a weird title.
I think we've got cut and paste word error.
Yeah, I think potato. Then on Wednesday, we do psychology. Randy Howe is going to be talking emotional self-mastery, trading mind under pressure, or trading mind under stress. Very important topic. Trading can be very stressful. It can definitely damage your results. The next week, Dr. Kenneth Reed, 8 p.m., is a Mastermind Pro class. That title also needs to be tweaked. Thursday's mentorship, 11 a.m. John, 4 p.m. with Ed, 8 p.m. Did I say 11? It's 11 a.m. with John, 4 p.m. with Ed, if you could scroll down, Peter, and then 8 p.m. with Thor. Don't forget about StockTradingSimulator.com, our free web-based replay simulator. Just go to StockTradingSimulator.com, where you can try it out 7 days a week, 24 hours a day, 365 days a year for free. Also, TradingTerminal.com, our all-in-one functioning data source for traders. Then if you're looking to come and check out the actual room, you can use the promo code PreMarket24 when you check out the intro membership. That's 7 calendar days, 5 trading days in the room. It is a one-time payment. It does not recur. And to gain access to all of the mistitled webinars that we offer, use the promo code READ50 to get half off the Elite Annual membership and a one-on-one coaching session with Dr. Kenneth Reed.
Fantastic. All right. Thanks, Norm. So let's get back to our potatoes. Our stocks.
Yep. That's the theme of the day.
Just for you, Norm. Potato.
Thank you.
Is potato. All right. So let's set some
It looks
levels
better than
here.
their chart.
That's true. Look, see, we got even LW sitting behind it. What is it? It's a potato.
There you go.
All right. So let's set some
Carlos
levels
would
on the.
put the dumpster fire, but you can pull up the potato. I like.
That's I got the potato. I'm gonna have my own thing. All right. So let's take a look at levels on some of these things. So as I keep mentioning every morning, pre-market settlement, right? 8 a.m. is often you get the settlement period. The consistent candles, right? Volume, low, small body, big wicks. You notice it sets a range. Again, is it relevant? Only occasionally. But sometimes it's worth setting it. You notice I do that in a different color. So I'm going to do that on coin here because it does set a range that I may want to pay attention to. If we're looking for some topside movement on this, there's not a great near course range here. I do like this candle though. So around $69, I'm going to put a level right there. Other than that, we got a gap back here early September. Maybe that's relevant because you notice we had another gap on the way down. Same relative spot. So I'm going to mark that gap on the low side, and then up here, oops, if I can hit the right key, on the high side. So that gives me 72.42. Let's just make sure that's accurate. That should be 72.50. I'm going to put it in there, and then on the top side, that would be 73.60. So sounds perfect. So if we get up into that range, that would be a fairly big move here on coin. Now we got something to look for. On the low side, the lows of the previous 2 days are just areas for me to watch. So that's good for coin. Mara is likely to be the same story. And sure enough, it pretty much is. You can see that gap. Now, these are in slightly different spots on Mara, so the profile looks different. I still have my settlement candle going on here. So, I'll set the range on that on the 1 minute chart. On the daily chart, I've got a level here on Mara at about 10.97, so virtually the whole dollar like we were seeing on coin. And then we got this gap space here that I will watch the bottom end of, okay? So that's what we got for those. We'll see if cryptocurrency continues to show movement as the market opens. Lucid, still looking good to me pre-market. Actually, one of the ones I like best so far this morning. Again, settlement candle. I will mark that because it's looking good on this. Again, not again, but we've moved above that range here so far this morning. So it may have no relevance if we moved out of that space and continued going up. If that's the case, I'm definitely going to look. We had this big down day back here on the 22nd. So, that is, if anywhere, going to be perhaps my first point of resistance for continued rise. 1555 is where I'm going to put a level. That's probably good enough. If we get up there, we've got a big move going, and then I can come back and revisit the daily chart. I mentioned NVIDIA. I like the look of it. Again, marking my settlement candle just in case, but we've moved up beyond the top of it. We'll see if it provides resistance on the way down, or support on the way down. I've got some daily levels already set here, 135.17 and 147 even. I'm sure those came off of the daily at some point. However, I'm not sure I like those levels. If I look at the near time price, I want to move this one down a little bit because look at this support that this had across 3 days. 133.50. Pretty consistently bounced off of that. So I'm going to mark that because it may provide resistance on the way up the same way it provided support on the way down. And then I want to move this level down to the top of this gap here. In fact, we got a bunch of levels on this. Interestingly, that it hasn't repeated the level support. You notice it's been slightly different each time. So I don't know exactly what that means. It means to me, in first glance, that the levels probably aren't that strong. It's more using other indicators than these daily levels I'm setting. But I'm going to put them anyways because you never know. High at 139.22 right in here. I want to see if they are relevant. So I'm going to put my levels there and we'll see if NVIDIA even pays attention to them. All right, so that's good on NVIDIA. While I'm doing NVIDIA, might as well take a look at AMD because it's in a similar spot. In fact, AMD, I've got levels all over the place since I look at this all the time. I'm going to clear them all. We're going to start over here again, putting some levels there. man, AMD, it's just been on such a steady drop. I don't even know where I would put levels in the way up, right? We got pretty much every daily candle that you could call significant. I think I'd more watch the whole dollar levels, the $5 levels, right? 70, 75, 80. You know, if they come into play, that's where I would worry about them. Other than that, you know, maybe at this gap point here, 81.47. So I'm going to give myself an early notice at 81.40, and we'll see where AMD goes. I'm hoping that we get a lift on it. I struggle to think of AMD at a $67 stock. It affects me because I'm actually a short bias trader. And the problem with it is that, you know, then when I want to get into a short, I'm like, it can't go lower, can it? But of course it can, right? It's dangerous to think that way because any stock, you know, it's dangerous to ever think it can't ever go lower or higher, no matter what's happening. Because unless it's at zero or, well, there's no upper limit, right? It can always go higher and it can pretty much always go lower. All right, so that's my main list. Let's go down to the secondary items, which would be BBBY. Still looking okay pre-market. You know, the price action slowed a little bit, right? We're seeing some drop off in volume here. Look at this. This minute had only 150 shares, 400 shares before that. So, like I said, pretty low volume overall. You know, as we're moving forward, I'd want to see greater volume to get really excited about it, which is why it's on my secondary. For levels, I mean, these candles are so small, right? It shows me it's out of play. Look at how small all of these candles are for the last month compared to where it was moving back here, right? And just the size of the candles, let alone the positioning of it. So, like, unless we start to make a big move breaking out of this area that we've been in, like over $7, I don't know that I'm going to get too excited on BBBY. So I'm going to leave it down there. AMC, similar, right? Tiny little candles compared to the size of the candles, let alone the move and the gap it created. In this case, you know, we're only at 7. I want to see whole dollars break 8, 9, and 10. I'll just use those as markers if we get there. Amazon, not looking bad pre-market. Not looking great, but not bad. Notice I had a settlement line. I see it right here at the bottom of today's settlement candle, which is interesting. But I'm just going to delete my lines, and then we're going to reset them here. So let's reset this. Amazon, you know, might be in play. I know that a few people have been watching it, certainly in the bear bull trading room. We'll see if it gets movement today. I also set a daily level at 123.68. I like that level just because, so we had this consolidation, and that was the high before it dropped into its current level. So that would be quite a move to get back there. But, you know, anything's possible, like I just said. So we'll leave that. Oxy now. Oxy in the low end of a range that it had set, right? It spiked up here to 75, all the way back down to below 60. If it's going anywhere, I'm going to use yesterday's. Look at yesterday's low. That is certainly going to be a level to watch. Already marked in my chart, and I'm going to use the low from over here in, when was this? Late August? Early August. August the 5th, low 56.83. So I'm going to put a marker there just if we get to that level. I'm going to want to pay attention to see if we get any support. Otherwise, I mean, I'm expecting Oxy generally to go up today, but right, I'm not going to be assuming that's what's going to happen because I just don't know. So that's what I've got.
I know there was some Nord Stream news on the Russian pipeline supposedly leaking or having been some kind of nefarious action taken there and all that.
Yeah, they're suggesting it was deliberately damaged and it could take years to fix, right?
Yep.
Yeah. So yeah, that could have some impact, and you know, maybe that puts all energy in play, but we'll see what happens. Norm, he's walking away. How about in the room or on YouTube? I just want to see if you guys have anything else that might have caught your attention that you want to look at. And Norm, likewise, if there's anything I haven't talked about that you think we should look at, let me know.
I'm still looking. I'm waiting to see what takes place here because I mean I largely our bounce this morning. And sorry I had to walk out for just a second, but the Evans, the Chicago Fed president, spoke earlier, and he gave some slightly dovish comments. I believe that was around like 6:30 this morning, maybe even earlier. That I think has helped some of this bounce this morning, and I don't know if it's going to hold. I mean, people are terrified right now. Um, you've got the whole markets in turmoil and everything else. So anyway, you can see the SPYs started to pull back considerably in the last 10 minutes or so, and I want to see where we are in the last 10 minutes before the open.
And that's a good attitude to take, because you never know what's going to happen, right? Like Norm points out, look at this move back. We're green. It looks like it's green a little bit of everywhere, but you know what? The markets could open and we could very quickly turn that perception around and go red and continue lower. So don't make the assumption everything's going up. Don't get yourself stuck in a position because you have conviction that it's going to move and then can't understand why it's not moving for you. Eric in the room asking on Tesla, what kind of stop loss should I do in this? I hesitate to tell you what you should do on it because it all depends on your risk profile and what you're sort of targeting in terms of a return, right? If you're looking for a big move, if you're taking a position where you're looking for a $10 return, then you need to have sort of a relatively big stop loss to make sure you give it the room to be able to take up that move, because you're never going to get the entry exactly right. It could still chop around or move slightly against you before it sets up the pattern. What I will say, and we talked about this before, you've got to always be aware of what the spread is on any stock. Tesla especially is a good example, where the spread on Tesla can go anywhere from 10 cents to $1, depending on how well it's moving. Usually it's 10 to 40 or 50 cents. And the spread is the difference between the bid and the ask. If you're not familiar with it, the significance of that is as soon as you enter a stock, you are down the spread. So if let's say Tesla's working on a 50-cent spread at that moment, the second you enter the stock, even with 100 shares, right, you're down 50 cents against those 100 shares. So, you're down $5 right away. 50 bucks? Anyways, you'd be down 50 bucks on that. So you got to be aware that you'd be down $50 on that trade, and so the stock has to move more than the spread just for you to get back to break even. So make sure you give it enough room. Make sure you take a sizing that's appropriate to the risk that you're willing to undertake, and don't get stuck in that. I keep mentioning one of the things that I like trading Apple and AMD. One of the reasons is that the spread is almost always a penny. Right? When it's 1 cent, I generally know the risk I'm undertaking and I don't have to worry about the spread as much. But not every stock trades with that same spread, so be sure you're watching it. You can watch it just by watching the difference between the bid and the ask, either at the top of the level 2 or in the level 1. It shows you the bid and ask numbers. The other thing is there's a configurable data element here on the montage. You can see it says RVOL 100% for me right now. You can move this to the bid-ask spread, right? And it'll show you what the spread is at any given moment. So right now it's showing me for Tesla, it's 9 cents. Let's go to our potato on LW, and it's showing the spread at $9.41. So, that's something you can use to very quickly tell you what the spread is on any stock. All right, so hopefully that helps. Let's get this potato off my screen. Is potato. All right.
And the one thing I'll add on the Tesla thing is, we all know, having traded it over the last several years, it can be extremely volatile. When you have something to that nature, you generally need to give it a little more room, take a little smaller size to make up for that risk difference. Otherwise, you'll end up getting stopped out a ton.
Indeed you shall. So, okay. So my list so far, I'm probably going to take a look at Coin just to see what it does after the open. Definitely watching Lucid, and I like NVIDIA this morning. So for me, so far, those are probably the top on the list, with my usual AMD and Apple, of course. As a secondary, Tesla is looking pretty good to me. As well as I'm going to keep an eye on Oxy just because of what's happening in the energy sector, and we'll see what pops up on some of the scanners or some of our members, as they always mention great stuff in the trading room. Frankly, I got a lot of call outs and good sort of catches from people who are watching different things than me in the trading room. A great reason to be part of a community. On YouTube, just checking to see if you guys are mentioning anything.
They are asking you to scroll to the top of the gappers list because you're scrolled
Oh,
about
you're
2/3 of the way
right.
down.
You are correct. Here we go. Oh, no. There we go. That's better. Oh, we got some new stuff. Look, ATXI, 47%. What the heck? All right, so 1.6 million shares. This is this has got to be a low float, right? Yep. So I show a float less than a million shares at 759,000 shares, gapping up 50% right now. This has got to be, it's a pharmaceutical, which usually, or therapeutics, which usually means some sort of phase something testing.
I would run from this as well. They recently had a split.
Oh. Oh, if this is just split news, then that's not exciting at all.
I don't think this is split news. I think this is something else. But
Okay.
it always throws up red flags when there's a reverse split. I don't know if the split took place this morning because that doesn't look like activity caused by a split. It would usually,
No.
not be happening at this time of day. But anytime something reverse splits, because this thing, my charts aren't filling up. There we go. See how it popped at 8:45. The split takes place overnight not during even pre-market,
Yeah.
trading hours. And so I don't know why it would do that. Then it also didn't. It theoretically would go, if it was $1, would go up to $5, and it was at $4, and but anything that has a reverse split is generally a little concerning. Now, I will say, and I confirmed that float on Trading Terminal as well. So
Okay, good. Thank you.
multiple data sources have that same float.
The split looks like it happened on the 23rd. You can see the jump from like 30 cents up to the $5 range. Whatever's moving it today, I don't see any news on it either, so I'm not sure. But like you say, new on the list, but I don't like it, so I'm going to run away. What else we got here? People are talking about SARK. Well, look, we sort of talked about that. I actually stay away from trading this. It's if you want to trade sort of the Cathie Wood funds, there's a couple of them now out there. SARK, I think, is the inverse of the Cathie Wood fund. A little bit of punch on the nose there, but that's something you can look at. I don't like them for day trading. People looking at SQQQ. Well, hey, look, if you're going to trade SQQQ, you're making a bet as to the direction of the market. We'll see what happens with the Qs overall, and where the markets end up taking us. So with that, that's sort of what we're looking at. If you can, give us a thumbs up on YouTube. We greatly appreciate it. Helps with the growth of the channel and brings more interested parties who want to sort of see how we set up the day. I'm going to be, like I said, looking at those ones that I mentioned, and we're starting to get some of our moderators lists into the room here. So I'll just bring those in here, and we'll see what they're watching. And so far we've got Thor, who's got a list. He's going to be watching AMD, Tesla, Oxy, the SPY, and the Q. So taking a look at the markets overall, and with a specific focus on AMD and Tesla and Oxy, well, he and I are watching the same things, which doesn't always happen. So we'll see what happens. Eamon doesn't like anything today, so he's going to be watching his reversal scanners. Eamon's got a very specific philosophy that allows him to identify his targets well in advance of the opening bell, and if he doesn't find pre-market setups he likes, then he, like he says, just watches the scanners. So, and I admire that approach. Mike did actually put his list in up here above, AMD and Tesla, keeping it tight and short. And Jared is just giving some commentary on where he thinks the market's going to find some support and or influence. So we'll wait for other lists. Norm, have you picked a favorite for this morning that you're going to watch?
No. Well, I do like Tesla. I'll say that. Potato, I will not be watching Potato because that would be like watching a potato. Quite literally. Tesla, I'm kind of digging Tesla right now.
Well, yeah, it's certainly got some movement, so we'll see if it can push its way back to around 300. Yes, indeed. And we got Jonathan posting up his image of "I'm just a potato" into the room. There you go. People are now putting up potato ticker symbols. Okay, well, we're getting close to our time when Brian will come on. Andrew is back from his travels. Will be in the room this morning, so we've got our dynamic duo back together. So it should be a lot of fun this morning. We'll see. Andrew always manages to find something interesting to trade and usually makes a great morning of it. So we'll see how he does this morning. Norm, welcome back after being away one day. And we will see you again tomorrow morning as we do this show once again starting at 8:30 with Jared on earlier at 8 o'clock for the Engineering the Markets segment. Thank you, everybody on YouTube, for watching. We greatly appreciate it. And we'll see you guys tomorrow in the room. We'll be talking to you in just a second. Later, everyone.
Take care. Take care, guys. Trade safe.